Hey guys, Ed Wilson here. Super excited to be a part of the Think Realty podcast. This is going on, I think, 6 years of the podcast now. And it's been quite the journey. Built Think Realty in 2013 as a third generation real estate investor because really I wanted to bring great information to you, information that I got sitting around the dinner table with my grandfather and my father, but wanted to bring that to you. And that's why we began in 2013 building Think Realty, just to bring great content information to you. We've got a great guest today that I'll bring on in just a second, but I want to say a quick thank you to our podcast sponsor, which is CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty and go over there and support them for them supporting us. All right, on the show today, we've got a good friend of mine, Joel Moyes. Joel, welcome to the show. Thanks so much
Hey
for being
guys,
on today.
happy to be here, man. Thanks for inviting us. I really appreciate
So,
the opportunity.
what's the weather like in Phoenix, you guys? Is it warm yet?
It's t-shirt weather. It was about mid 70s yesterday. Gorgeous, kind of chilly morning this morning on the way into the office.
Yeah.
So typical what you see for the Waste Management Open and Barrett Jackson and all that stuff. This time of year is just like it's the exciting time of year to be in Phoenix.
Yeah. Until it gets to June, and then you guys are all
Until you
bailing
don't
out.
want to be here, right? Until you want to be in Costa Rica or somewhere further north.
Yeah,
Certainly.
for sure. Cool. Well, let's jump in today. So you've really adjusted some of your business offerings. I mean, I think many people in especially the Phoenix area know you for realty executives and all that you've done on the retail side. And I know you've been a real estate investor for quite a while, but
Mhm.
you've really launched this new opportunity, which is Red Brick Property Management, correct?
Yeah. Yeah. So been in the real estate business for about 30 years now. Got my degree from WP Carey, a degree in commercial real estate. So I started on the commercial real estate side of the business, helping landlords and tenants. On the retail side, as you know, built up a successful career helping as a broker, and then started a development company in 2005. During the downturn, we were buying as much as we could. Between '08 and 2014, we tried to buy a shopping center every quarter. So we had centers around the West. And my partner, Jeff Hawk, and I have done upwards of 3 billion in transaction volume just in retail. So through that through those channels came the opportunity to acquire Realty Executives. We acquired Realty Executives almost 10 years ago now, and have got the jumper cables out and rebranded it and kind of retooled and rebuilt the entire company. So we have 700 professional agents in that company as well, and do upwards of 2 to 3 billion a year in sales in the Phoenix market. But we saw a need from a vertically integrated company standpoint. We have agents at Realty Executives that do property management as managers of managers, but we didn't have our own direct management company. So we acquired Red Brick Realty, which came with some agents, but mostly the attractive part of that was it gave us the opportunity to acquire kind of an acqui-hire with all the team and basically get heavily vested into the property management space in Arizona. So we manage personally for everything from an accidental landlord that's got one door upwards of, we've got a client that has about 50 doors. And so manage about 300 doors around the valley. And it's been good because it's been great because it's given us another channel in our business to kind of keep our finger on the pulse of what's happening. So that's the elevator speech of a 30-year career, so to speak. So
Yeah, well, that's great. In my opinion and in my experience, property management makes or breaks a real estate portfolio. And having somebody that has your experience running a company that actually does this for others is a great thing. For you, because there are a lot of property management companies out there, what sets you guys apart? Like, what are you focused on? Are you guys looking at technology to, help find better tenants? I mean, like, kind of what's
sure.
the pathway or the specific area that you guys are headed down?
Yeah, so I think as with many of the businesses that you've run, I mean, I'm talking to the king of exits here. So with many of the businesses, it's all about systems and people. So if you have a problem in your business, it's either a people problem or it's a system problem, in my opinion. So with someone who has run other large companies, large organizations, built teams, I think we take a unique approach to an industry that's probably a little bit more Pollyannic at times, unfortunately, especially on the SFR side. We take pride in having a white glove approach. And I tell our clients, it's like, hey, we're big enough to matter, but we're still small enough to care. We're not 2,000 doors, we're not 5,000 doors. And I think the difference is you've got ownership that takes a very personal, hands-on approach. Yes, we have a great team that runs kind of the day-to-day ops, but you know, I think, the old term of move fast and break things, it's like we can be nimble here because I'm here. And so having the support of my business partner, Jeff, and myself in the business, I think is unique to the extent that we're not realtors by trade. We don't really think about ourselves like prototypical real estate agents. We think about ourselves like entrepreneurs, and we try and build teams around that are autonomous, that can execute on a game plan without necessarily. I always tell our staff, it's like my job is to make sure that if I get hit by a bus, nothing stops. Like literally, the business just keeps trucking. So that's a big part of it, And then everybody all clients in our business, everybody has our cell phone. So the distinction between most of these kind of management mills and Red Brick is that you have a personal relationship with your manager. There's no waiting on hold. There's no VRUs. There's no menus or button pushing to get a hold of your manager. You can call and text, and you have a personal relationship. And then on the tech side, it's, there's so many tools out there that you can try and integrate. I think keep it simple is probably a smart, adage. And that's, be really selective about what you're going to implement into your business, so you don't just create a bunch of processes for no reason. I think underwriting, some of the AI tools that we're using now, just on lead gen and on onboarding, have helped significantly. And then having staff that maybe isn't necessarily US based, but it's very efficient after hours. So your business isn't stopped just because your working hours are quote unquote 9 to 5, so to speak. Not that 9 to 5 matters to guys like us, but
Yeah. Do you primarily manage in the Phoenix market, or are you guys expanding outside of the Phoenix market?
So right now it's mostly Maricopa County, which, I think that's another kind of core focus for us. Is we turn down business in other markets because you really need a network of really highly qualified vendors in order to be able to execute well in this business. So even being geographically 2 or 3 or 5 hours away, like Flagstaff or Tucson, it really just doesn't work. You do need to have boots on the ground. Now, that's not to say that we can't replicate the systems and processes and plant a flag in Tucson and Flagstaff at some point. And will we? Probably at some point. But right now, we're in the 5th largest city in America. And 14% of the homes here are investor owned. So it's a huge market. There's plenty of business to capture here first. So we'll continue to grow here until we try out other markets.
What are you seeing in terms of just the general marketplace? I mean, because you are seeing the retail side with your retail business, but you're also seeing the investor side with the management company. What are you seeing just in the general marketplace? Are you seeing the market come back? Is it beginning to accelerate? Like, what's the feeling out there?
Yeah. So on the retail side, I mean, retail vacancy in Phoenix is like 4%. I mean, it's been incredibly strong. It's been if you talk to bankers and you talk to guys that do large loans throughout the country, retail has been the sweetheart for the last 5 years. You're seeing more pressure, and that's bankers for you. They kind of go from category to category. Industrial and flex space was super hot 5 years ago. It's cooling off. Same thing with multifamily. Retail has remained strong. And for decades, people have said retail's dead because of Amazon. Well, a certain type of retail is probably dead, but we've focused our entire portfolio on service-based retail. So stuff that you can't get online, daycare, dentist, salons, things like that. So our entire tenant base of tenants in our portfolio is all service-based tenants or valued tenants. One of my favorite sayings is old, ugly, and full. It doesn't have to be sexy to make money. Obviously you want to take pride in the stuff that you own and manage it well, but a lot of people get caught up in the ego of the way things look, and it really doesn't matter at the end of the day if the pro forma is screaming. So that's what we see on the retail side. On management, from a rents perspective, we're seeing plateau right now. Candidly, it's over the last 3 years, we saw such incredible rent growth in the Phoenix market, 10, 15, 20, 30% sometimes year over year in some markets. Right now, we're seeing flattening or much lower growth, like in the 2 to 4% range. Some of the strong markets like Scottsdale, parts of Arcadia, Central Phoenix are still growing. The tertiary markets are what I call outside the loops. Like if you look at the map of Phoenix, we've got these, the loop 202, loop 303, loop 101. Outside the loops, you're seeing some pressure on rents, no more than probably 3 to 5%. But that doesn't mean that it's affordable yet. Rents are still high for most people in Phoenix based on their average household income.
If I'm an investor and I'm looking at the Phoenix market, is it still possible to buy something off the MLS and rent it and cover the debt service, or are those days gone?
Right now, I would say no. I mean,
Yeah,
are there exceptions to every rule? Yes. Can you find a diamond in the rough? Yeah, but you probably got to call on 500 properties that are listed. The
sure.
wholesalers are affecting that statistic because they're good at getting to the client potentially first before it ever gets to market. So if you have a team that has the ability to get to the client before it gets listed by a traditional agent, great. And there's deals there. There's always deals there. And those deals kind of slide with rates, right? Like as rates go up, the wholesalers are smart, their pricing gets sharper. So they always they do a good job, I think, of maintaining their spread. If I were buying, people are going to murder me for saying this, but I would be buying in the Midwest. I'd be buying in Tennessee and in Ohio. If I wanted to try and pencil an actual cap rate on a pro forma type deal, it'd be very difficult in Phoenix unless you pick something up wholesale. But
Sure.
that's one of the reasons why we like being on the management side, because
Right.
oftentimes we have clients that are like, hey, just let's get rid of this. And we have other clients that want to buy all the time and we're buyers. So we can
Yeah.
oftentimes help our clients if they want a quick exit.
And it seems like to me that Phoenix, for the last 5 to 7 years has been more of an appreciation market. Like you're not seeing heavy cash flows, but you are seeing the appreciation and the growth of the values of the property. Is that pretty accurate?
Absolutely. Yeah. I mean, double digit year over year on appreciation. Now that's probably petering out in 2020, late 2024 and 2025, but a hell of a run for the last 5 years on appreciation.
Yeah.
So if you were, and people ask me, it's like, hey, is it a good time to buy? I think if it's an owner user deal, if you're going to own it and live in it, it's always a good time to buy, because otherwise, what's the old saying? Rent is 100% interest.
Sure.
Um, but if you're an investor, it is getting more difficult in Phoenix based on pricing to make any type of cap rates work. So if you're a zero cash flow guy and you're going to play the appreciation game, great real estate, great long-term hold real estate. But if you're looking to get into something and immediately turn on a cash flow spigot, it's much more difficult in Phoenix to do that.
Sure. And not to get political at all, and this isn't really a political question, but there is a Trump effect that's happening, especially in the housing market. Are you starting to see a Trump effect, negative, positive, doesn't matter, just more of like what is the effect of the changing of the administration? Are you
Sure.
seeing buyers that are more positive? Are you seeing more activity? Are you seeing more sales activity? Have you seen any effect on the economy, being that we're 2 months into this?
Yeah. So even with prices being up, right? Prices are still up. We did see a 15% increase in number of listings in the Phoenix metro area in January, which is a huge bump in the amount of product that's on the market, which is really helpful for buyers.
Now, is
Buyers
that
are
just
also,
the sellers are optimistic? Is that why they're seeing
yeah,
that?
I think they're starting to recognize, well, a couple of things are at play, in my opinion. So, number one, we're seeing less and less 3% mortgages that are out there in general. So, the stuff that is held, that people have mortgages on, and again, 42% of the homes here have no mortgages, so it doesn't matter. But those that do have mortgages, you're seeing a lower and lower percentage of those in the threes and in the fours. So, they're saying to themselves, now if I sell something for a deal that I have a 5% mortgage on, and I can go replace it for 6.5 or 6.7%. For them, from a lifestyle perspective, it's not that big a change. So they are more optimistic. We've also seen pent up demand because uncertainty leading up to an election causes people to just simply wait. And so the third quarter and the fourth quarter of last year were much tighter than normal, candidly 30-year lows on volumes. But we're starting to see some of that kind of pent up demand come out. The other thing I'm seeing is like, you've got these, I'll call them kids, but people in their late 20s, early 30s that are still potentially living with their parents, but they're stockpiling cash and they
Yeah.
want to own homes. And so those buyers are coming out now, and we're starting to see more of them. And I think the market in general, is starting to understand that rates in the sixes and sevens are, it's not the end of the world. It's still a 30-year kind of average. It's the new normal. So at Realty Executives, for example, volume's up 8% in sales volume in January. And that's in transactions, number of transactions. And then volume, dollar volume was up 14% because prices are higher.
Yeah.
So, whether it's Trump or whether it's just the lingering pent up
Right.
demand after the uncertainty leading up to the election, I think we're seeing people
Yeah.
stabilize and start to get the market. We're seeing more velocity in the market.
Sure. Awesome. So just a couple last questions on the actual property management company.
Sure.
Yeah, just kind of explain what type of properties you're willing to take on. I mean, are you taking on short term, only long term? Are you doing some sort of, retail or commercial, or is it primarily SFR?
It's for Red Brick Realty and Red Brick Property Management. It's 100% SFR, and I say 100%. We do have a couple smaller multifamily deals in there. Nothing that has on-site management. So where we can fill a need in the market for multifamily is 4 and 10 and 20 plexes, units that
Mhm.
are not big enough to have on-site leasing and on-site management. We can fill that need, but the preponderance of our portfolio is SFR. We don't do any short-term rentals. It's only long-term rentals. And I'm getting more and more calls all the time. Our onboarding team is getting a lot of calls from folks that have been short-term rentals in Phoenix and are wanting to kind of transition out of STRs and into long-term rentals. Even though the cash flow may be lower, the stability is a lot higher. The surety of having a tenant in there is higher. We have a tenant guarantee that we offer at our company. It's a 6-month tenant guarantee. And I give that because we have a less than 1% default ratio. So we underwrite tenants really well. We manage the relationship with the tenant. Philosophically, we treat tenants like junior property managers. They're there on the property. They're going to know what's going on a lot more than us. So if we treat them with respect and we treat them like junior property managers, it ultimately protects our fiduciary to our owner, which is to take care of the property.
Sure. That's awesome. How can they get in touch with you if they'd like to talk to you guys about managing their properties?
So super easy, rentredbrick.com. Or you can call my cell, 480-216-6761. I literally take calls from clients personally all the time. If I get overwhelmed, the call will go to another senior property manager. And all of our property managers have an average of 23 years of experience in the business. So no rookies.
That's awesome. Very
Yeah.
cool. Well, thank you for being on today. Really appreciate it.
Thanks for the opportunity, Eddie. Thanks, man. Appreciate it. Catch you
One
later.
last thank you to our sponsor, CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty. Also, make sure you take Joel up on his offer to help you with your property management. I can tell you that having over 4,000 doors personally, who you choose to manage your property is very, very, very important. You better get into a relationship with someone that you trust. Hearing numbers like he was throwing out there, less than 1% vacancy, those are huge, huge numbers you should definitely pay attention to, and choose wisely when you're choosing a property management partner to make sure that you're getting the best performance out of your asset. And then as a wrap up, I just want to say thank you to everybody that's out there listening and being a part of this show. And I want to remind you that we've got the Think Realty Conference and Expo that's coming to Phoenix, Arizona, March 27th. So right there in Joel's backyard, March 27th. Don't miss your chance to learn, network, and make deals with some of the biggest names in real estate investing for a limited time. Get a buy one, get one on tickets if you just go to the actual thinkrealty.com website. Click on it and use the code podcast. If you use the code podcast, it'll give you a buy one, get one, just as a thank you for listening and being a part of the show. Thank you so much for being a part. Make sure you pick up your local magazine on the Barnes & Noble shelf, Think Realty, and take that home with you, or subscribe and get it to your doorstep like I do. And always keep up to date on the latest and greatest in real estate and real estate investing. Thanks so much. Have a great day.